Like many of you, I used to think trading psychology was about controlling emotions. After blowing multiple accounts and losing a 5-figure PAMM investment, I discovered something crucial. Your trading psychology is actually built through your data. Here's what I mean. The preparation work starts before you even trade live. I've signed up for many mentorships and learned various trading styles, but here's what made the difference: understanding your strategy inside out. After backtesting over 3,000 trades in the past 8 months, I discovered something fascinating about probability that changes everything. Look, most traders focus on win rates. They think that they need to win 70 to 80% of their trades to be profitable. I used to think the same way too. But here's what I discovered. I'm profitable with just a 21% win rate. Let that sink in for a moment. Here's why this matters. When I first started trading, every loss felt personal. Every missed trade felt like a missed opportunity. I was constantly asking myself, what if I added to that position? Or what if I held longer? Sounds familiar? But when I started looking at the actual numbers, everything changed. Let me break this down in a way that completely transformed how I used to think about trading. With my current strategy, I win about 21% of my trades. My average winner is 3.92R and my average loss is 1R. Now, most traders will look at this and think it's terrible, but let's do the math together. For every 100 trades, I win 21 trades, which gives me 82R profit. I lose 79 trades, and the net result, I'm still profitable by 3R. But mind you, this is assuming I have a 79% losing rate. My actual losing rate is only 45%. But here's the real breakthrough. When you truly understand these numbers, something magical happens to your psychology. You stop caring about individual trades. You stop trying to predict what's going to happen next. Instead, you start thinking like a casino operator. If you need a trading journal with all the necessary analysis, I got you covered in this video up here. Download my free trading journal and get undeniable proof that your strategy works. I will make a video on how to exactly conduct your backtesting sessions to get the most out of them soon. Subscribe to me so you won't miss out on that. Think about it, does a casino care if you win a hand of blackjack? No, because they know over thousands of hands their edge will play out, and that's exactly how I trade now. When I put on a trade, all I expect is that something will happen. I don't need to know what that something is. I just need to know that based on my backtesting, the odds are in my favor. But here's where it gets interesting. Understanding the numbers is one thing, actually trading with this mindset is completely different. Let me show you what I mean. Last week, I had a perfect setup. Everything aligned with my strategy. I took the trade, and guess what? It immediately went against me. Now, the old me would have panicked, moved my stop loss, maybe even doubled down on the position. Why? Because I was emotionally attached to being right. But here's how I trade now. I completely accept that anything can happen. When I say anything, I mean literally anything. Some random news could drop. A big player could dump their position. A tweet could move the market. And you know what? None of that matters. See, most traders, including myself, when I started, tried to predict what's going to happen next. We spent hours analyzing charts, reading news, following other traders, all trying to find that perfect setups that can't lose. But here's the truth I learned the hard way. There's no such thing as a setup that can't lose. Let me give you a real example. A few months ago, I had what looked like the perfect setup. All my indicators aligned. Price action was beautiful. Even the higher time frame supported my view. I took the trade with complete confidence. And you know what? I lost. But here's the key. It didn't bother me at all. Why? Because I've completely accepted that any single trade can be a loser. It's like flipping a coin. Just because you predicted heads and get tails doesn't mean your prediction method is wrong. It just means that this particular flip didn't go your way. This brings me to what I call the probability mindset. When you truly trade with this mindset, three things happen. First, you stop trying to predict the market. Instead, you start looking for setups that gives you an edge, situation where probability is likely in your favor. Second, you stop caring about being right. This is huge. Most traders' biggest psychological problem is the need to be right. But when you trade probabilities, being right or wrong on any single trade becomes meaningless. Third, and this is crucial, you start focusing on the process instead of the outcome. This was a game changer for me. So how do you actually implement this in your trading? Let me show you exactly how I do it. Every trade I take has to pass what I call my probability filter. First question I ask myself, would I take this exact same setup 100 times in a row? If the answer is no, I don't take the trade. Here's why this is powerful. It forces you to think in probabilities rather than prediction. When you are willing to take the same setup 100 times, you are acknowledging that some will win, some will lose, and you're okay with either outcome. Am I taking this trade because of FOMO or because it fits my tested edge? This is crucial. Just last week, I watched a huge market move and felt the urge to jump in. But when I asked myself this question, I realized I was about to trade out of FOMO, not because I have an edge. The third and most important question, have I predefined my risk? Look, the market can do anything at any time. The only thing you can control is how much you are willing to lose if you are wrong. Let me give you a real example from my funded challenge. I took a trade that went against me immediately. But because I had my predefined risk and accepted the probability of a loss, I had no problem letting my stop loss do its job. That same trade would have been a disaster if I haven't prepared myself psychologically. Now, here's where most traders go wrong. They try to eliminate losses completely. But that's impossible. Instead, what you want to do is create a framework where losses don't affect you emotionally. The most important lessons I've learned about trading psychology is that success in trading isn't about being right all the time. It's not about catching every move. It's about consistently executing a strategy that gives you a mathematical edge over many trades. Think about it this way. Every casino has losing days, but they never change their rules just because they're having a bad day. They stick to their edge because they know it works over time. That's exactly how you need to think about your trading. Your only job is to execute your edge consistently, manage your trades, manage your risk, and let probabilities play out over a long time. Check this video where I talk about how I passed my funded challenge in just 3 days by executing my edge consistently. Remember, the market doesn't know who you are. It doesn't care about your prediction, your account size, or your goals. The only thing that matters is whether you can execute your strategy with discipline. Trade after trade, day after day. If you take anything away from this video, let it be this. Stop trying to predict what the market will do next. Instead, focus on developing and executing a strategy that gives you an edge. Accept that any single trade can be a loser, but know that over time, your edge will make you profitable. Let me know in the comments what's your biggest psychological challenge is in trading. In my next video, I'll show you exactly how I maintain this mindset during drawdowns and losing streaks. Remember, trading is simple, but it's not easy. The only difference between success and failure isn't in your strategy, it's in your mind.